course, good morning to the West Coast because it's still morning time here on the West Coast, but it's the afternoon for everybody else. So thank you very much for joining the live stream. Today, we're going to be talking some more about the mainstream media propaganda about how it is that the Federal Reserve is trying to conduct their monetary policy. Literally, everybody has got this wrong. Like, I cannot believe how prevalent the misinformation is amongst like just about every single person out there. And it's not my theory. Like, this is not a theory of mine that I'm trying to try to prove or something of that nature. This is definitely the monetary policy that's coming from the Federal Reserve, where they're not going for a 2% target. Everybody thinks that they're going for this 2% target. And we have proved through all the documents that I share from the Federal Reserve itself and the testimony that came from Jerome Powell just a week ago or a week and a half ago, whatever it was, in which that they straight up questioned him that you are trying to achieve an inflation that is above the 2% target. And Jerome Powell said, yes, we are not going to review that policy until the end of the year, meaning that they are going to continue to conduct themselves in the average inflation rate over time. That is not a 2% target. So as everybody is thinking that they're working real hard to try and get the inflation down to the 2% and keeping the interest rates elevated and all this other stuff that you see spreaded throughout the mainstream propaganda, and even within their own statements, it gives that illusion that that is what's happening out there, but it's not. The Federal Reserve is attempting to go for a 2% average inflation rate over time, which means that they are going to have to make up for the past deviations from that 2%. From the great financial crisis all the way up until COVID, the Federal Reserve failed to achieve a 2% target. They got it a couple of times, they made it above a few times, but for the majority of the time, they were under 2%, meaning that now they have to have inflation running extra hot, extra long for an extended period of time to make up for those deviations, meaning they are not going for a 2% target, and they are not going to change the way they conduct monetary policy. They're not going to change they're going to review the changes to monetary policy. There we go. At the end of the year. This is what he said. So until the end of the year comes, they are going to continue to conduct themselves on the average inflation rate over time expectations. Now, in order to get that inflation expectation to remain elevated, they have to spread this propaganda or else nobody would believe it. So they have to convince everybody that they're going for a 2% target and that they're not able to achieve it. And by that happening, it's going to keep the interest rates elevated. And this is what everybody anticipates. And by everybody anticipating that, they will then conduct themselves in a way that will actually achieve that sort of outcome, because inflation is a self-fulfilling prophecy. You begin to conduct yourself as if it's happening. All right. And just by conducting yourself in that way will actually bring inflation on. Now, if you think about some of the things that have come from their statements, like think of the credible threat theory alone, right? If you're not familiar with the credible threat, I'm going to explain it real simply because most people who have been following me on this channel definitely know what the credible threat theory is. But a very simple description of the credible threat theory is a guy who invents a gold machine. And with this gold machine, he can produce as much gold at will with very little cost or energy. And the moment that this information got out to the markets that this guy can make this machine, before he even produces a single ounce of gold, just the credible threat that he can do it would be enough to start bringing the price down on the market. Right? Before he even did a single thing, not a single ounce of gold was even produced, and doesn't even have the machine to do it, but the credible threat alone would change the markets. Now that is happening right now. This exact moment, you can see the 10-year treasury, right? As that starts to move down, that is going to start spreading throughout all interest rates. Like if you want to know where interest rates are headed, follow the 10-year. Wherever the 10-year goes, all interest rates start to move. Now, if the 10-year is going down, credit card debt will go down, car loan debt will go down. These are new loans being issued. The mortgage, everything, right? Everything follows this 10-year. So if people are under the anticipation that the Federal Reserve is going to, say, reverse course on the balance sheet, right, where they are no longer going to let treasuries roll off, well, now the treasuries will start to rise in price and the yields will start to fall. See, as the Federal Reserve is trying to unload their treasuries, the price of treasuries fall and the yields rise. So if they're going to go the opposite way, the yields will come down and the price will rise. So if the speculation starts to move into treasuries where people are like, wow, the Federal Reserve is going to allow the yields to come down and the prices to go up, I can buy treasuries now, right, with the anticipation that I'd be able to sell them into the future. Like, you don't even have to look at what you get a return on yield. You can just think, man, my portfolio will increase if I buy treasuries now, and the idea that the price will go up and the yields will come down. And so this is going to reflect back into the rest of the mortgage markets. But again, we have to think nothing has changed. The Federal Reserve has done nothing. They are sitting on their hands and then using their words to now change the way the market is gee whiz, guys, I am really having it. This is the way that they're going to get the markets to change their expectations of what's coming into the future. And you can see by the article I leave down in the description, they're saying like Jerome Powell gave a blessing to the S&P or something like that. And I'm thinking, no, he didn't do anything. He just used some words, right? But yeah, that can change the way the market is going to react to it in the way that they're going to behave. All right, I only can be out here for maybe about a half an hour, guys. We're about 14 minutes after. Yeah, so I got probably about another 10, 20 minutes here before I gotta call it quits. I gotta be at work in 20 minutes. All right. So let's go and read some of these comments here. Hail Nider. All right. Sage Monofo. All right. UE. Okay. Crash for the fun. What's up? Rich says, yo, UE. What up? What be, buddy? All right. Mark says, happy Friday. Sage Monofano says, Monofo? How am I supposed to say that? All right, 4 + 3 on the dice. Very cool. Calling 5 on the dice. Caught the live, right on, self-education. Hey. Tony, yes, he does. Oh, you deleted the message. I don't know what it says. Hey, Richard. All right, afternoons. Hey. All right. So inflation will rise again. Well, here's the thing. Inflation is going to probably rise again if people are anticipating that it's going to happen. I also had suspected that inflation was going to remain elevated for a significant amount of time when they asked for, well, they didn't ask, when they had expectations, this is the Federal Reserve, had expectations that they were going to get help from the supply side of things. I knew that was delusional thinking back then. In fact, it wasn't even accurate. Excuse me, guys. That wasn't even accurate for the Federal Reserve to say that. They knew back then when they made that statement that we are going to expect, or we are expecting help from the supply side of things to then bring inflation down. I said the moment that he said it, the very first time, I said that ain't going to work. That is not going to work, and inflation is going to stay extra long or extra high, extra long for an extended period of time because you are not going to get help from the supply side of things. There is no way that a manufacturer, distributor, retailer, anybody who is within the supply side of things is going to ramp up investments to try and bring inflation down. They are not going to produce more. They're not going to try and hire more. They're not going to try and expand because the exact person that they need in order to have a strong business is going to get damaged by the Federal Reserve and the rising of interest rates. They said it. We want to bring consuming down. That's like the whole thing, what the Federal Reserve is attempting to do, to bring consumption in line with demand, right? And so, bring consumption in line with supply. But because supply was so limited and consumption was so high, they bring consumption down, and supply side is saying, hell no, we ain't gonna contribute into that. Why would we do that? That doesn't make any sense to us, right? And I mean, I know it from being on the retail side of things and being within the distribution network, right? You can see truckers shutting down. You can see people like lowering inventory levels. They're not ramping up inventory levels. Right? So this in turn is going to keep inflation running persistently high until that breaks and something changes, right? It's all part of the bullwhip effect, really, if you think about it. All right. Confidence. All right. Welcome, everyone. Thank you all night. Hey, going to change it to 3.5%. Yeah, I mean, I would, until they actually do it. See, this is the thing. Like, I put very little expectations on where it is that the future interest rates are going to be until they make an exact statement. At the next meeting, we are going to do this. That would be a forward guidance statement. Right now, everything that you're hearing coming from the Federal Reserve that sounds like forward guidance are credible threats. right? They're credible threats. Think about it. They are not going to change their monetary policy. They're not going to even review a change to monetary policy until the end of the year. That doesn't jive well with the people who say that the Federal Reserve is acting politically, right? Because that doesn't make sense. At the end of the year, considering that we have an election year and all this other stuff, people think that the Federal Reserve is going to adjust their monetary policy to deal with that. It's not. They are not even going to review monetary policy until the end of the year. Okay? And this is something very important to understand, because the monetary policy strategies coming from the Fed are not like flying off a whim. This is something that was planned out 20 plus years ago. And I mean, Ben Bernanke gave that speech on deflation and how to prevent it from ever taking place here back in November of 2001. Right? I mean, that's well over 20 years ago. And the things that he was describing within that speech in order to prevent deflation are the things that the Federal Reserve is using right now. These are the tools that they use in order to prevent deflation. This is something very odd for a lot of people to understand if they don't realize that 20 years ago they knew that 20 years ago, the Fed knew that they were going to run into the lower bound of zero. Dropping of interest rates was no longer an effective tool. And they had no other tools in order to stimulate the economy at the time. And that's why he gave that speech, because they knew, the Fed, everybody knew up there at the banking system that they were going to be running out of monetary policy. And then the great financial crisis hit, and they fired up the new tools, the quantitative easings and all those asset purchases and all the other programs that they had. So this is the new form of monetary policy that comes from the Fed. The adjustment of interest rates is no longer the main tools anymore, right? This is where a lot of people are misunderstanding the Fed. Yes, they do use the adjustment of interest rates to adjust the overnight lending rate within the banking system, but ultimately their real tools that they use are now these obscure ideas of like quantitative easings and the credible threats and the forward guidance and all this other stuff. That's the real monetary policy, the one that gets you to believe what it is that they want you to act like. I mean, think about how as we get closer to the idea of them cutting interest rates, and the more that they push out the information that they are going to do it, the more that you're going to find interest rates lowering before the Fed even does anything at all, right? Now, if the closer we get to that moment where everybody thinks that they're going to cut, if inflation is running extra high, they're going to say, I'm sorry, guys, we're going to have to keep interest rates elevated for a while because the inflation is staying persistent. No kidding, right? I mean, this is exactly what it is that I felt that the Federal Reserve was going to be doing when I learned about this monetary policy from John Williams and his speech of monetary policy for a low neutral interest rate world. It's like understanding all these parts and pieces to the economy, to the way the monetary system works. It is very difficult to wrap your head around it, especially if you're trying to integrate politics into this decision, because they are not, the Federal Reserve is not political. I don't care what anybody says. Like, I cannot find anything within their speeches that go all the way back to November where they talk about how they want a particular administration to either be in office or going to help this administration or anything like that. Like, none of that stuff can I find coming from a Federal Reserve statement. Now, there are plenty of people out there who have their theories and on their ideas about it, and in a lot of ways, it makes a lot of sense. But if you just study straight up the Federal Reserve monetary policy directly from their own statements, there is nothing in there, nothing that acts in a political fashion. The only thing I could really find is that they knew the next time there was going to be a recessionary pressure, that it was going to be a fiscal response, right? Meaning that the government was going to have to borrow a bunch of money in order to stimulate the economy. Typically, the Federal Reserve would expect the markets to do that. By dropping interest rates, people will go out there, buy houses and cars and go on vacation, and that would stimulate the economy. But they hit the lower bound of zero. They couldn't do it anymore. People wouldn't borrow more money because the interest rates weren't going to drop that far. So instead, the government had to step in with all their government spending and stuff like that. But ultimately, the Federal Reserve didn't really care if it was the government spending it or if it was the people spending it. At that point, they couldn't get the people to spend it because they couldn't lower interest rates enough. So it doesn't matter to them to spend the money. Get that money out there, fill the sluices. It doesn't matter where it goes as long as it's going. All right. Let's cruise down here to the bottom. All right, we got 218 people watching with 45 likes. Go hit that like button so the algorithm picks up this video and spreads it around for more people to join in. Not to mention, once it is uploaded, then the algorithm will spread it around for more people to come in and watch this video, which I think is a really good one. I mean, I don't know how many other people are talking this strategy. Like, I have not deviated from this one little bit. And even when inflation was running at its high and everybody told me I was crazy and I didn't know what I was talking about, and that the Federal Reserve is definitely doing, reactionary stuff to the current conditions, I stuck to my guns. I'm like, no, that is not what's happening, and it's going to come back down, and we are going to find that the monetary policy is not going for a 2% target, and we won't achieve that. The Federal Reserve has never, ever, ever been able to achieve a 2% target. Ever. Like, I don't know why people would think that they would be able to do it now. Like, the idea that the Federal Reserve in the past would try to maintain a 2% target. If the inflation ran above 2%, they would adjust monetary policy to bring it back down to 2%. If it was under, again, they would try and bring inflation back up to the 2% and maintain a 2%. And regardless of what happened in the past, it didn't matter. They just let that stuff go, just tried to maintain a 2% target. They couldn't do it. They failed. They failed miserably at that idea. 10 years of attempt, they couldn't do it. Right? So they were like, okay, well, let's try something different. If we can't achieve a 2% target, maybe we can achieve a 2% average inflation rate over time. So the times that we're under 2%, we just let inflation run hot above 2%. And over time, we might be able to find an average inflation rate of 2%. So there could be literally no time in the current future expectations of the Federal Reserve will they'll ever be at a 2%. Ever. Like, they may always be 3 or 1, always trying to maintain an average, but never once ever being at 2. Right? This is something I believe people are missing. Like, they think that the Federal Reserve can get to the 2% and then boom, lock it in at 2 and keep it there. It doesn't happen. They've never been able to do it. Not once in the history of their time. I mean, well, I shouldn't say that, but not in recent time anyway. All right. Great videos. Thank you so much, Don Pro, I like the name. All right, Dow about to hit 40,000 and people can't afford anything. It's all bullcrap. How is a $100 bill worth more than a dollar bill? It's the same paper with a different drawing on it. You know what really, paper currency means nothing, right? It literally means nothing at all. Now, if you look at a dollar and the value of a dollar itself as being paper, I mean, it's actually already ruined because now it has ink all over it. I mean, at least you could have used it for something before it had all the ink on it, right? So now, like, a dollar means nothing. It is literally nothing, okay? Except for two things. One, it can pay off debt. That's pretty cool, right? So now you have something that will going to relieve your debt. If you have credit card debt, a car loan, a house loan, whatever, the more dollars you come up with, the more you can alleviate your debt. Now, here's the important part of a Federal Reserve note. The paper dollar itself is that it is the first lien and paramount right to the Federal Reserve Bank's balance sheet if they were to go bankrupt. Now, I doubt you would ever be able to actually go to the bank and say, hey, man, I want access to your balance sheet. I got my Federal Reserve notes and you just went bankrupt. I mean, I doubt that would ever be a situation in which that would actually happen. And even if it did, I doubt you'd be able to get your access to the balance sheet. But within their own statements, right? If you go to the Federal Reserve banks, like you go to the Dallas Fed or whatever issuing bank, like, each Federal Reserve note has a different issuing bank on it, right? That Federal Reserve note is the first lien and paramount right to the Federal Reserve's balance sheet if they go bankrupt. On that balance sheet, they have SDRs, they have gold, they have other assets that are sitting on that balance sheet that you have first access to if you have the Federal Reserve notes themselves. Not bank deposits, not U.S. Treasuries, not, stocks and bonds, none of that stuff, right? Federal Reserve notes. So in that case, it gives them a little bit higher value than what a lot of people want to give them credit for. Keep stacking your metals and you will sleep at night and be ready for when the system crumbles. I really agree with that. Like, this is something people ask me all the time. What do I do with my money? I don't know, man. I mean, once you figure it out, let me know what you do, because I don't know what to do with your money. I know what it is that I need for my personal self. I know what it is that I have for goals and expectations in my life, but I don't know what it is that you need. And people ask me all the time, what do I do with the money? I don't know, right? But my suggestion to somebody who has nothing, they're living paycheck to paycheck right now. They have like no savings, no stocks. They don't have any kind of investments whatsoever, and they have no savings account. What do? Next time you get paid, take your paycheck, take $30, right? You go down to the coin shop and you buy a generic ounce of silver, or you buy a silver eagle. Just go buy one. Go and put it in the dresser drawer, right? Or go and put it in your whatever your secret spot. And then next time you get paid, you do it again, and you do it again, and you just keep doing it. And I tell you what, when you start getting a stack of silver and you can kind of do that number with them and drop them into your hands, you want more, and you start to understand the value of it. And next thing you realize is that when you start having a significant amount of it, that bill, the issues with the government, the possibilities of, world wars or whatever, all that stuff all of a sudden becomes less important as it is the bigger that safety net gets, right? It becomes like the anchor to stability. Like, I don't know how else to quite describe it, because now you have something that's outside of that third party. It doesn't matter what goes on out there, right? I mean, the whole world can collapse, man. It doesn't change the bullion. It's always going to be a precious metal. It's always going to have value. There is never going to be a time in history in which that gold and silver are not valuable. There will never be a time when it'll go to zero, ever. Dollars can go to zero. Bitcoin can go to zero. Companies can fail. But silver and gold can never, ever be zero. And so you start there. All right, dollar bills are the original NFT. Yeah, kind of. All right. There are good and bad dreams. Need me some all-American dollar bill green jeans. All right, guys. Let's see. I still got a few more minutes here. All right. And buy a desert eagle. Oh, I'm sorry. A desert eagle to New. Do I have glasses in here? I don't. 2-year easily leads the 10-year. All right. That's so true about stacking gold and silver. Yeah, Dan. I mean, it's just like, I know that for me, like when I was at my worst, and I mean, a lot of you know my story, that I was an alcoholic and I was very deep in debt and I didn't have a whole lot going on. And I'm living like, I'm living 20 minutes outside of town, right? I'm living out in the country a little bit, I mean, so I'm working in Astoria. I live outside of Astoria for a little ways, and my car breaks down. Like, I have no way of getting to work. Like, I don't have anything. I don't have any credit. I don't have any money. I don't have anything, right? And I'm stuck. I don't know what to do. And I call my buddy up and I'm like, hey man, you still got that Tahoe for sale? He's like, I sure do. And I said, would you trade silver for it? He says, you know it, right? I pulled out 165 ounces of silver. He drove that Tahoe up, signed the title over to me. And I thought, man, saved me. Like, I will never not have silver on hand again. It is an insurance policy unlike anything else out there, right? And so it literally saved me, at that point. I had wheels again and I was back going to work. And I've done that twice. I did a partial trade on a Suburban where I traded, I think it was like maybe 70 ounces of silver, and the rest was in cash for a Suburban. And that's like, I mean, I've done it twice now. And again, like I can't find anything else out there that can provide you with that sort of assurance, that gives you the ability to sleep at night, to know that you can, pay a bill or at least have access to some sort of funding when credit is limited or, business is gone or whatever's happening. All right. Love to listen to your videos. Do you think it is possible to guess next real Federal Reserve move, not speech, with decent consistency? Well, I mean, I think it's better to understand, I think it's better to understand what it is that the Federal Reserve is attempting to achieve, right? And knowing that, it makes it a lot easier to exclude all the crap that you hear out there, especially when it comes to it's an election year, so the Fed is going to do all this stuff. That doesn't exist. That is completely made up. There's nothing that I could find that even comes close to validating that sort of argument, right? And I look for it. I mean, I would say it. Like if I found it, I would say it straight up, you know? I mean, but all the things that I talk about from the Federal Reserve, nobody talks about. Like nobody is talking about average inflation rate over time, except for I hear Meet Kevin has, but I haven't seen the videos on that, and I don't know if he's explaining it as well as I do. But I mean, at least there's somebody out there who's, you know, supposedly talking about average inflation rate over time, as opposed to a 2% target, if that's what he is saying. Now, understanding that it's going for a 2% average inflation rate over time, it makes it hard to understand what it is that the Federal Reserve is going to do with their monetary policy because they don't give us any mathematical formula for figuring out what average inflation rate over time is. So now you have to start reading through all the Fed documents to try and grasp what it is that they are feeling that is going to be the outcome from trying to achieve a 2% average inflation rate over time. And this part has become so hard to try and pinpoint. Like, how is it that they are going to figure this thing out? Now, if you want to see a good video, go back. It was probably 3 weeks ago that I had done a video talking about the propaganda coming out of Time magazine. And like, I call Time magazine out perfectly. Like, I mean, just they are spreading the propaganda like you wouldn't believe, and it's almost deliberate. Like they talk about how the Federal Reserve goes for this 2% target. The Bank of some New Zealand central banker came up with this 2% target, and this is what they're going for. And they have this huge article that just goes and just describes this so like actually pretty well, like pretty, you know, they articulate it out there really well, right? And then it comes down to almost the very end of the article, and then they go in to say that the Federal Reserve doesn't see anything but a 2% target. And I thought, bull, that is wrong. That is absolutely wrong. You talk about this 2% target and then say that the Federal Reserve doesn't see anything else but that? Complete wrong. So wrong. And in fact, that argument was thrown out. Like you can't even use that after the congressman called Jerome Powell out saying that you were going for above a 2% average or 2% inflation, right? Which means that it is no target. Like that Time magazine, which if somebody was to read, would think that they're reading something really accurate, something that's coming from a very prestigious, you know, source. It was completely wrong. It was so misguiding. I couldn't believe it, you know, and that's why I did the video on it. Anyway, go watch that video and then go and take a look at the description. And there's a ton of links that I left all to the Federal Reserve. In fact, I left all those links for The Economist, who they were quoting inside of that Time magazine. All right. I was just like, here, guy, you don't understand what the Federal Reserve is going for the monetary policy. So I left all the links in that video. Here they are. Like John Williams, the Jerome Powell speech, all the talking from different, you know, central banks, or I'm sorry, all the different Federal Reserve banks around the country, all their different talks about average inflation, right? And there's no pinpointing any of it. It's all like, you know, this very obscure idea of how it is that they are going to try and bring the 2% inflation rate closer to the current time. And this is like, you have to go watch the videos on it. I'm not going to try and explain it right now. It is just it takes too much. It takes an entire video to explain that. Misguided from our perspective, perfectly guided from theirs. Yes, absolutely right, All-Nighter. Time magazine is deliberately liberal. It doesn't matter if they're liberal or not. It doesn't, that part is inconsequential to it, right? It's the misinformation that they are pushing out there. It's not like this is a liberal, it's not like this is a liberal concept. This is a conservative concept too. Both of them are arguing the exact same bullshit. And I'm sorry to cuss, but that's exactly what it is. They're like, I look at all of them and I'm like, man, you all need to watch UE videos. You really do. Like maybe I'll sit down and have a roundtable discussion with them and explain what monetary policy is, because a guy in a 99 Ford Explorer can do it far better than they can. Right? I obsessed over it. I don't know why. Right? But when I read that speech coming from John Williams talking about how they were going to try and attempt to have an inflation rate that was above 2%, I was asking the question then, how are you going to do it? I mean, you took a balance sheet from $850 billion to over $4.5 trillion and failed to get a 2% inflation out of it, This was after the great financial crisis. Okay? But yeah, he's talking about how they're going to have an inflation that runs persistently high above the 2%. How are you going to get that? How were they plot? I mean, this was 2018. There was no idea that there was going to be a massive inflationary scenario coming to the economy back then. But yet John Williams was predicting it, saying, well, we're going to have to just let the inflation run hot for a while. And I'm thinking, how are you going to do it, man? You failed to do it with $4.5 trillion. You couldn't do it with $4 trillion, and now you expect to do it? Yeah, but yeah, here we go. Now we got it. And totally in line with what it is that they were hoping for. All right, guys, let's see here. I got about 5 minutes left and I got to go. All right. Would you be able to run your own one journal? You have decent name already. Would you be able to run like my own journal? Like, yeah, I probably could. I'm going to try and put a course together so that I can teach this stuff in a way that people can actually internalize it for themselves. Like, I want to incorporate monetary policy, the Cantillon effect, Gresham's law, all the stuff, and try to come up with a course so that by the time you're done with this course, you will have internalized this information. So when you're out there operating on your daily basis, like, you don't have to be some high-level macro economist with degrees and stuff to figure this stuff out. In fact, I think it's better that you don't have that stuff. Because once you're indoctrinated into it, you have to forget all those things that they tried to show you or teach you, and end up in the same condition that most people are in. Like right now, like 99% of the people are misguided right now. And it is just like, I think the Federal Reserve is back there, giving each other high fives. Like, damn, we did it, man. I can't believe it. Except for UE, but just, ignore him. And, once you have internalized this, your day job, like, I don't care if you're driving truck or you're serving tables or you're peddling lumber or, whatever it is that you're up to, you will have economic information in real time that is far superior to what anybody out there with degrees who is waiting to read economic analysis, right? They're looking for the data to come in that we live in real time. That's why we can see it way ahead of anybody else. That's why I was able to predict the lumber market as well as I was. It's because I'm living in the thick of it. Way better than anybody else is. They're all pulling out these sheets. Look at how much these companies made. Look how much all this. And I'm thinking, yeah, you have no clue. Right? You have no clue of what's really taking part out there, because I'm watching loggers, I'm watching truck drivers, I'm watching the mill operators, I'm talking to other retailers, distributors, wholesalers. There is no corner that I didn't have view of. And so while somebody's sitting there going, oh, I got these data points, and I'm like, okay, good for you. All right, that's real nice, man. But I hope that works out for you, considering that I was accurately able to call out the lumber market the entire time and with complete confidence, in it. Even when everybody was saying I was delusional and they're unsubscribing from the channel and talking about being like a Fed shill and all this other stuff, I didn't care. I'm like, you know what? I don't care. This is the way it is. This is the way I feel it is. This is the way I see it, and I'm going to stick to it. And it worked out. QE didn't spark inflation because it's just an asset swap. In fact, it takes an interest-bearing asset out of the private sector and replaces it with a non-interest-bearing one. Right? So money printer go burr doesn't cause inflation. Exactly right there. And I'm going to agree with that statement, because all the money printing that had taken place during quantitative easing 1, 2, 3, and 4 failed to produce the inflation scenario. And that's exactly right. It's because if that money isn't lent into the system and spent, right? Like, in order for there to be inflation, you have to have consumption pick up. That consumption, when it picks up, has to have money entering at all channels at the same time. Once you have ramped up consumption and the supply-demand imbalances start to occur, then prices start to increase. However, if all you have is a bunch of money sitting in the bank and it's not going anywhere, it's not going to create inflation. However, if you borrow that money to buy houses and cars and stocks and bonds and all that other stuff, you can see those assets inflate while the rest of the stuff stays normal, because again, like, the money has to enter all channels at the exact same time. The new money back in quantitative easing 1, 2, 3, and 4 was just filtering its way in through a few channels, not all channels. When you have stimulus packages come out, that's all channels at the same time. And I mean, Cantillon, this isn't me. This is Cantillon describing this, right? Read this book. He talks about that exact thing. right? And to understand it. Yeah, there's a lot of differences now with fiat currencies than there was back in the day, but if you really truly want to understand how the flow of money works, read the 3 chapters on the increase and decrease of money to the state. You can find a link to this down in the description of this video right now. And I have an Amazon affiliate link. You don't even have to buy this book. I mean, I carry the book around with me because I like reading out of the book itself. But you can go and get the essay from the Mises Institute. Just type in Cantillon essay on economic theory, and the Mises Institute has links to it. You can just go and download the PDF and read it for free. But you can support the Uneducated Economist by buying one for yourself, or just follow that link, and anything you put in the cart, and your Amazon cart for the next 24 hours, I'll get credit for as well. And I'll get a little commission off of it. So it's a way that you can support the Uneducated Economist. All right, I'm stacking my NVIDIA, yeah, and I'm sleeping good. Yeah, I'm not into it. I'm not touching that one. I mean, I hope it works out, but I don't get into things that have like a mass amount of hype to it. I already fell for that one back in the day with Max Kaiser and Crash JP Morgan buy silver, and all this hype that went into buying silver and stuff like that. I'm still a fan of silver, but I'm not a fan of that. I'm not a fan of attention towards things that I'm trying to get a hold of or buy into. To me, mass media attention to something is going to obscure the price. Alrighty, guys, I'm about 3 minutes into this, and I'm gonna have to go. All right. Yes, Jared. Multi or SFH, great combos and sharing in WhatsApp. See my channel for more info. I have to give it to All Nighter, man. He is working hard in every direction, man. Gary properties are pennies on the dollar and cash flow well. No appreciation, though. Just cash flow. All right. Good video. Hope you continue this talk on the next one too. Thanks, Simon. Yeah, cash for the fun. You bet, man. I mean, this is, again, like I've said it before, this is like 80% of my channel right now. I mean, I talked a lot about lumber a few years ago when lumber was real exciting, but lumber's boring. It moves like, I don't know, $10 per thousand or something like that. It's so lame. It's so quiet. It's so like unappealing to talk about that I just don't know what else it is that I could talk about lumber that would be like exciting to hear about. I mean, I include like, home builders or, real estate or something into it, and then people get kind of excited, but the lumber story is very boring. I've been studying up on this monetary policy in a way that I just don't feel a lot of people had. I think that I really have combined put together the combination of ideas spanning back 2 decades now that has put this into motion into a way that I just don't see any deviations to it. Like, it is taking place right now in the way that I feel Ben Bernanke had described, back in the early 2000s. And so understanding it from this fashion, it really allows me to block out like a lot of stuff that people say, oh no, the Fed's going to act like this because of this reason. And I'm like, do you know about all this monetary policy that they have like been describing for the last 2 decades and haven't deviated from? Like, are you incorporating all this into your thoughts, into your expectations of what it is that this political environment is going to do? I mean, I don't find where most people are doing that. Most people are thinking that the Fed is being very reactionary, like by the minute, and it's not. Like, this was described very well a long time ago. I didn't believe that they could actually do it, because back in John Williams, when he gave that speech, monetary policy with the low neutral interest rate world, there was no way. Like, I'm thinking, there's no way you're going to find inflation, bro. Like, you're not going to do it. And just because I say it every time, here it is. Right? This is what John Williams had to say. Monetary policy strategies for a low neutral interest rate world given November 30th, 2018. Today, we face an altogether different set of problems stemming from a very low neutral interest rate. That is the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low. 2018. November of 2018. The problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. They want it too high. That's what they got. they achieved their goals, right? And to think that they don't know what they're doing is just like, I don't know how you can say that. Like, if you don't think that you know what the Fed is doing, how the hell are you investing right now? You're investing with the idea that the Fed is screwed up, not that they're conducting themselves exactly the way they said that they were going to, right? Which isn't fun, right? I mean, if they were to go ahead and say, hey guys, you know what we're going to do? We're going to cause a bunch of pain to the economy by letting inflation run extra hot, extra long for an extended period of time. How are you guys going to react to that news? You going to like that? Of course not, right? So if you say that they screwed up, then the inflation that runs extra long, extra, can't be blamed on them, right? You can't blame it on them. You're like, well, they screwed up. They don't know what they're doing, right? So you can't blame them because they're screwed up, right? Because they don't know what they're doing. No, they knew exactly what they were doing. They did this on purpose. And everybody who fell for it fell right in line with what it is that they needed them to do in order to conduct their monetary policy. They needed people to believe that there was going to be inflation going into the future, because that was the problem that they were facing, an expectation that was persistently too low. Thank you so much for this $5 super chat. I am going to be late if I don't cut this off right now. Bravo Zulu, $5. Man, thank you so much for this. What you think gold is going to do? I try not to make predictions like that, brother. I try not to, just because, I'm terrible at market timing and stuff like that. Here's the thing that I have found about gold and silver is that I have very little expectation of the price rising, right? All I want to do is try to collect and stack as much as I can. It's at the end of the day, if the entire system collapsed, nobody's going to care what the price you paid for it was. The only thing anybody's going to say is, how many do you have, right? So that's the important part, is to stack up as much as you can, because who cares? Like, if you are looking to try and make money off of the gold move, then go buy some paper ETF or something like that, right? I don't know. Like, I'm not investing in gold. I'm not investing in silver. I buy it because I want the insurance policy. I hope, my actual hope is that silver would stay at $25 an ounce until I am 80 years old, and then goes to $500, $1,000 an ounce. If that happened to silver, that would make me super happy, right? To have absolutely no move in silver, not increase, to stay right where it's at for the rest of my life. If that was until I'm 80 years old, and then if it doesn't, then I can give it to my kids and say, here you go, man. Now you have an insurance policy where you get to sleep at night, right? And that's literally my expectations that come from gold. So, okay, like I don't expect it to move up in price. All right. You're going to be late. All right. Got to go, guys. Uneducated Economist, thank you all for being here. We have 302 people watching, 129 likes. Go hit that like button right now. And thank you so much for the $5 super chat. I really appreciate the support. And thank you for clicking on that link and, buying something from Amazon for yourself. Doesn't have to be the Cantillon essay. The Cantillon essay is for free on the internet. You can go get it yourself. But, you can support the Uneducated Economist by simply just changing your buying habits over to clicking on the link, the affiliate link that I have down in the description, and I can get a little bit of credit for that. So, again, I'm trying to promote myself more, try to get the viewers to sponsor the channel, because I don't want to take sponsorships. And man, they are just pouring in right now. I have like 2 or 3 or 4 people emailing me every single day wanting to sponsor the channel. And I think about it, man, that's a lot of money I'm leaving out there. But it's worth it to me to have a quality channel, that I bring good quality content that is not, influenced by, a sponsor or something like that. All right. Uneducated Economist, you guys let me know.